The market is currently open, and Opendoor Technologies Inc. Nasdaq Open is trading at 5.18, reflecting a positive intraday movement of 1.67%. While many observers are focused on this morning's modest bounce, the real story lies in the seismic shift in the company's trading profile. A closer look at the volume reveals a staggering surge. Today's trading activity is far above its 30-day average. This isn't just about a good day on the charts. It's a profound change in the stock's character, from a forgotten growth, tech stock, to a high-volume, highly speculative trading vehicle. This unexpected pivot, driven by a confluence of macroeconomic factors and a new narrative, is what every investor needs to understand. The common expectation for Opendoor has long been tied to its identity as an iBuyer, a term that became synonymous with the housing bubble and, subsequently, its dramatic collapse. The market narrative paints a picture of a company perpetually at the mercy of real estate cycles, a highly leveraged, unprofitable business model that seems destined for boom and bust cycles. For a long time, this was reality. The stock price languished below $1 for a significant period, reflecting widespread investor skepticism and the harsh realities of a cooling housing market. The general belief was that Opendoor's fundamental business was broken, a flawed concept in an environment of rising interest rates and stagnant home sales. But this belief, while rooted in past performance, is missing a crucial part of the current story. The recent rally, which has seen the stock price rise over 700% from its 52-week lows, is not simply a symptom of a returning housing market. It's a direct consequence of a massive narrative and behavioral shift. The company has moved from being an investment case based on fundamentals to a target for retail traders and a new kind of meme stock speculation. This change has created a powerful self-reinforcing dynamic where the very act of trading the stock is becoming its own catalyst. Delving into the recent trading data, we see this story unfold in real time. Daily trading volumes have skyrocketed, dwarfing the average. This activity is not characteristic of long-term institutional accumulation, but rather the rapid-fire buy and sell cycles of retail investors and short-term traders. The stock's high volatility, with massive intraday swings, confirms this. What's driving this? A few weeks ago, a prominent investor appeared on a major financial network, comparing Opendoor to the early days of Uber and Airbnb. This single event, a powerful narrative hook, was enough to ignite the fuse. The idea that Opendoor could become a verb in the real estate transaction space, similar to Ubering or Airbnbing, resonated deeply with a new cohort of investors. It created an expectation that was wildly out of sync with the company's recent, dismal financial history. The market, in its current state, is reacting more to this compelling narrative than to the actual balance sheet. We're seeing a classic case of expectation-driven momentum, overwhelming reality-based valuation. This isn't to say that the fundamentals are entirely irrelevant, but they have taken a back seat to the psychology of the crowd. The institutional activity, or lack thereof, further underlines this point. While there has been some recent institutional buying, it has been largely overshadowed by the sheer volume of retail trading. The most recent 13F filings from major institutional holders show a mixed bag of increased and decreased positions, but many of these filings are delayed, reflecting old data. The real action is happening on a daily basis in the high-frequency trading of individual investors. The short interest in the stock remains relatively high, creating a tension that fuels further volatility. As the stock price rises, short sellers are forced to cover their positions, which in turn drives the price even higher. A classic short squeeze. This is the very essence of the new reality for Opendoor. It is a stock defined by its trading mechanics and the emotional momentum of its holders, not its underlying business performance alone. The company's business model itself is incredibly capital-intensive and highly sensitive to interest rates and housing market health. But right now, that's not the primary driver of its stock price. For those new to the company, Opendoor's core business revolves around iBuying, or instant buying. It uses proprietary technology and algorithms to make cash offers on homes, allowing sellers to close quickly and with certainty. The company then takes on the risk of owning and reselling the home, a process that requires significant capital and is highly susceptible to market fluctuations. It makes money on the spread between what it buys a home for and what it sells it for, along with service fees. In a hot housing market with low interest rates, this model can be highly effective. In a cooling market with high rates, it becomes a liability. This is precisely what happened over the past few years, leading to significant losses and a dramatic decline in the stock price. The company recently reported its second quarter 2025 results, and here's where the narrative of broken business is challenged. While the company still posted a net loss, it achieved its first quarter of adjusted EBITDA profitability since 2022 and beat revenue estimates. This was a crucial beat, as it provided a single point of validation for the new optimistic narrative. The company is actively working to right-size its operations and reduce inventory risk, but its future hinges on its ability to navigate a very challenging macroeconomic environment. Looking forward, the future outlook for Opendoor is a tale of two realities. The expectation, fueled by the recent rally, is that this is the beginning of a sustained long-term recovery, a return to the high-flying tech valuations of the past. The catalysts for this optimistic view are clear. A potential drop in interest rates, which would thaw the stagnant housing market and make its borrowing costs cheaper. The continued consolidation of the iBuying space, leaving Opendoor as a dominant player, and the potential to monetize its vast dataset on real estate transactions, an idea that is appealing to the AI-focused investor. The company's new interim CEO, formerly its CTO, has also introduced a layer of expectation, with some hoping for a new, visionary leader to guide the company into a more profitable future. However, the reality presents a more complex picture. The company's guidance for the third quarter is notably weak, forecasting a significant contraction in revenue. This suggests that the Q2 beat may have been a one-off event, and the company is still actively facing the headwinds of a difficult market. The high leverage and debt on its balance sheet remain a significant risk. A sustained downturn in housing prices or a prolonged period of high interest rates could quickly erase the recent gains. The current stock price may have already baked in all the good news and more, leaving it vulnerable to any negative news or market shift. The ultimate question is whether Opendoor is a fundamentally sound company that has turned a corner, or just a speculative vehicle for traders. The current reality is that it's both. Its business model, while challenged, is showing signs of resilience and adaptation, but its stock price is currently driven by a speculative fever that has little to do with that fundamental progress. It's a high-stakes bet on the intersection of a macroeconomic shift and a social media-driven trading frenzy. It's a fascinating case study in modern market dynamics, where a compelling story can be more powerful in the short term than a spreadsheet. What do you think the future holds? Do you believe the recent rally is a sign of a true turnaround, or is it just a short-lived speculative bubble? Comment below and let me know whether you think the iBuying model is viable for the long haul. Ultimately, the Opendoor story is about the tension between what the company is and what the market hopes it could be. For now, hope is winning, but reality always has the final say.